We're rebounding in the technology sector when it comes to public markets. Remember, chip stocks fell into a bear market Friday, in part because of questions posed by the release of Kimi K3 by China's Moonshot. We're off session highs right now, but the Nasdaq 100 adding almost a percentage point, the SOX up 2%. And it's a lot of the compute names, NVIDIA, but also memory names that are driving some upside in those public markets. Since Moonshot released its Kimi K3 model last week, everyone's debating what it really means. Does more efficient AI mean less hardware? Is China closing the gap faster than we expected? Where does AI's real value ultimately accrue? Joining us now is Crosslink Capital partner Mary D'Onofrio, focused on venture growth investments, but across software, AI, and infrastructure. And for the last 3 days, I've said Kimi K3 many times. But it was interesting to take a sort of straw poll of VCs, founders, people in industry of how they react to it so differently. Some people are very fearful, defensive. Others say this is very good for AI as a whole. Very difficult job first thing on a Monday, but your reaction to what happened?
Well, Kimi K3, as you said, was phenomenal, and it's similar to the DeepSeek moment we had last year.
Right.
You know, 2.8 trillion parameter model, and what it demonstrates, I think, is that China and open weight models are closing the gap with frontier models. Obviously, it was done based on their own benchmarking, but according to the benchmarks,
yes,
they're fourth. And while you can debate the merits of those benchmarks themselves, the productivity gains are tremendous. And I think that in general, it is part of the pathway towards more widespread open weight model usage. And in the context of enterprise budgets ballooning in
yes,
AI, I actually think that it's probably a boon for AI ubiquity over time.
When you think about your existing portfolio of companies, were you sort of like, okay, how does this impact the trajectory? Has anything actually fundamentally changed for the different pieces of the AI 5-layer cake that you're invested in?
I don't know if it changes the cake itself, but I do think it's another demonstration that models keep leapfrogging one another, and if companies don't out-innovate, they're going to be leapfrogged too. Whether it's every single model seems to outperform the last, and it's a matter of out-innovating by creating moats of data, of performance, of customer resonance, and otherwise, unfortunately, the innovations in both frontier and open weight models is tremendous.
You were on the crossover investment team, but basically focused on private and maybe later stage or venture growth investments. 7 years at Bessemer as well, prior to being at Crosslink. Sort of introduce us to your overall investment focus, your investment thesis.
Yeah, of course. So as you mentioned, I'm a partner at Crosslink Capital. I help to lead the mid-stage venture practice. I spend an asymmetric amount of time in vertical AI and AI infrastructure. What
are some examples of what you call vertical AI and AI infrastructure?
Yeah, of course. So AI infrastructure is a place I spend a lot of time. That's the physical and software systems required to build, train, and run models. And in the first wave, it was about how to build a scalable model. And now we have those, as we're talking about right now. And so in the next wave, it's how to deploy them quickly, fastly, cheaply. Agents, of course, being one of the ways to do so in an efficient way. Taking models as the reasoning layer, adding tools and infrastructure around it to connect to outside data and apps, and using memory in order to do it in a way that produces outcomes. And agent infrastructure itself has become a sector that I've spent a lot of time in, whether it's agent harnesses or the identity layer around it. One of my portfolio companies, Teleport, is a leader in that space, and it's a place that I'm spending an asymmetric amount of time.
I wanted to get to that kind of background on your focus to try and answer some of the questions that the Kimi K3 moment posed. One idea is that basically by lowering the margins at the model layer, it's an enabler. It opens up the market a little bit. It's a driver of demand, essentially. Do you agree with that kind of thinking in response to this?
I do think that it demonstrates what a lot of even the inference infrastructure layer is demonstrating, which is as cost has gone down by 95%, does that displace the total dollar value expended by customers? And I would argue it probably won't, because the migration will just be from workloads that are at the frontier, that are most expensive, and of course that require the most reasoning capabilities and are the most advanced, but they'll go to cheaper models that still provide the same amount, or the requisite amount of compute for the question being posed, but do so at much cheaper cost while not sacrificing on things like latency and performance.
It's interesting because like Kimi K3 kind of pricing $3 per input, $15 per output on the token side, like it's quite in line with like what a lot of leading models are also priced at. I found that interesting. Maybe we should talk a little bit about valuations. It's not a sophisticated argument, but when this all happened, a lot of people came out and said, well, if a $20 billion Chinese startup can do a 2.8 trillion parameter model with these economics, why are we assigning OpenAI and Anthropic a valuation of $1 trillion? They looked at the sort of fundamentals of that. Is that the right way to think about it?
Frankly, I don't know yet, and I don't think anybody knows yet, because even in the context of those questions, Anthropic and OpenAI are still producing billions and billions of revenue, and it's not just from their they have first-party businesses, they have third-party businesses, and I think obviously the API opened for Moonshot, but the open weights have not yet.
Yeah, and 27th of July.
And it's worth noting that because it's open weight doesn't mean it's free to run, and so I think that's a dynamic to these models that people potentially underappreciate as well.
The argument you've just outlined is the same that Greylock's Son Motomedi made on Friday on the show, that these are very robust businesses that have multiple revenue streams. You are focused on the private markets, but we've had some really interesting IPOs of late. Not just SpaceX, but also SK Hynix doing its ADRs. I was in New York City for that. What does that signal to you?
I think it's two things. Obviously, those are fantastic businesses. And I think when it comes to what it says for the markets is that investors are really looking for anything having to do with the AI build-out, AI infrastructure. Obviously, you made the reference to the performance of public market stocks today. But I also think it's one other thing for the capital markets, which is that we have this narrative that potentially the IPO window is reopening, but is doing so with these long-standing businesses with billions of dollars of revenue that are frankly older. They're at the cutting edge of innovation, but they've been around for decades. And so I think it's saying, there is a desire for things having to do with AI, but nonetheless, investors are still, they're hardly speculative. Investors are looking for things that are relatively secure.